So that capital is available. There's just not as much transactions happening, mostly due to that bid-ask spread between where the sellers are expecting or they want their property to trade and where borrowers are or buyers are willing to transact.
We all know the last few years have brought dramatic shifts in interest rates and valuations and transactions velocity, but today we're going to go beyond the headlines and understand what deals are actually getting done and how borrowers are navigating a tighter credit environment where investor appetite is shifting. To guide us through this conversation, we have a fantastic guest today, Chris Litzler. Thanks for joining us, Chris. Chris brings years of experience in commercial real estate lending and has a deep understanding of how capital is flowing or not flowing in the current environment. And he's worked with sponsors, investors, institutions across multiple key markets and different cycles. Today, he's here to share his insider view on how the lending landscape is evolving. Chris, thanks for coming. I know our audience is actually really looking forward to hearing more from your perspective. Great opportunity to have you on today.
Deanna, it's great to be with you. Thanks team for having me here. Just a little bit more background on myself for the viewers. Chris Litzler, I sit in Cleveland, Ohio. I'm managing director of capital markets at Marcus & Millichap. I got a small team with me. I got guys in Columbus, Detroit, Chicago. We got a little footprint in the Midwest, and what we do is we broker primarily first mortgages. So all property types, right? Retail, apartment, self-storage, hotel, industrial, all across the capital stack, all different types of lenders, capital sources, banks, credit unions, pension funds, CMBS, life insurance companies, Fannie, Freddie, HUD. So we got a pretty wide view of what's going on in the capital markets across all property types. So I'm happy to be with you guys today.
Well, thanks. What's the lender mood like right now in mid 2025?
I'd say that lenders generally are very optimistic. I think there's a lot of capital on the sidelines. I think there's a lot of money ready to be put out. I think the challenge is putting it out. It's matching up borrowers' expectations for rates and terms with the amount of transactions that are going on. Historically, 50% of my business has been acquisition financing. And we all know that the amount of transactions, the amount of trades that are going on right now is just considerably less than they were in the peak of 2021. So that capital is available. There's just not as much transactions happening, mostly due to that bid-ask spread between where the sellers are expecting or they want their property to trade and where borrowers are or buyers are willing to transact. As far as refinances go, in the apartment business, we're very fortunate. We have Fannie, Freddie, and HUD, which are mandated to provide that liquidity for housing. So that market is robust. That type of financing is insatiable. There's plenty of money to be put out. And then as far as other capital sources go, CMBS, the life insurance companies, banks, credit unions, that's more of the same. It's the money is there. There's abundant funds available to be put out on the street. It's just, does somebody want to transact, necessarily need to, on a refinance? I'm not going to elect to pay off early my 3.5% mortgage with 6 years of term left to trade into 6% money without some other reason, whether that's a need for capital, that's a covenant breach, that's a partnership dispute. So we're really seeing not a ton of elective refinancing happening. Usually there's some sort of event-driven reason to transact.